Greetings, everyone. I'm excited to welcome Nicolas Kopp, CEO and founder at Rillet. Nicolas, welcome to the show.
Thanks for having me on, Ben. Good to see you again.
Yeah, you too. Looking forward to this. Near and dear to my heart for the topic that we'll be talking today. But first, tell us a little bit about your background.
Yeah. All background very much in accounting and finance through and through. So for context, we're building accounting software, full-on GL, ERP to go compete in the mid-market with some of the solutions like NetSuite or Sage. So my background specifically is quite relevant for that. So I have a full background in accounting. I spent also a bunch of years in finance and helped build a bank before this, actually. So it was very early at a company that literally built a fully regulated bank from the ground up. So somewhat familiar or like intimately familiar, frankly, with all the ins and outs of building complex software in like highly regulated as well as hard to displace type of industries.
Okay. All right. Interesting. Yeah, I saw your background on LinkedIn. Yeah, definitely finance and accounting. And I saw that the banking is really interesting. So great background to set you up for what you're doing today. So yeah, let's talk more about Rillet specifically. So tell us the products and their services that Rillet offers.
Yeah. So we are a full ERP system, AI-native ERP system. So we replace QuickBooks, Xero, NetSuite, and Sage Intacct. That's sort of the four key incumbent legacy solutions. In terms of offering and why people make the leap to what is arguably a very, very hard to build and also high on trust system, like why would you not go with a legacy player up and go with that new startup, is basically there's 3 to 4 things that are really unique about what we're doing. So number one, on the product itself, you have a really robust multi-entity, multi-currency consolidation module, and it is really hard to come by on the market. It's very intuitive and people love it, frankly. So a lot of businesses go international earlier these days as well. So even smaller companies and then big businesses anyways, our customers there have like organizations that are spread around 50 entities across the world, for example. So that is one big area why people like the software. We have a very unique also revenue recognition, deferred revenue workflow that's natively embedded in the GL. I don't want to mention too many of the competitor legacy names, so I'll keep it a little higher level, but like think of this as a really clean RevRec deferred revenue solution natively built into the application. We can do consumption-based billing, metered usage-based billing really well, and it also integrates very cleanly to Stripe, Salesforce, and HubSpot. So I'm sure folks out there that have dealt with Stripe to your GL type of connection, I know the pain that we're solving here. So
yeah, there seems to be a lot of pain with the getting that Stripe data. So, but tell us, so yeah, I speak the RevRec language, deferred revenue, all that stuff. So Nick, tell us what industries or verticals are you after? Because some software platforms, right, they're going after everybody. Agnostic, they don't care. But do you go after a specific industry with Rillet?
Yeah, great question. So we are very much focused today on asset-light type of businesses. So these are businesses in SaaS AI. That's where we got started as well initially when we started the company. Some folks may know us from your surveys actually then. Back when. And then from there, we started expanding into professional services. So that was a very natural expansion. And by now we're like fully cross vertical. So we have SaaS AI, professional services, fintech with like agency-like businesses, non-for-profit. So it's really a wide gamut as long as there's not too much of an inventory or hardware component to it.
Okay, that's really interesting because it was, yeah, I knew like, it seemed like you guys started kind of SaaS first or that, very specific focus, or maybe it was asset light from the beginning, but now it sounds like services, AI, fintech, not-for-profit. So do you think you'll continue to expand or just stay with that core thesis of just asset light businesses?
For now, we're very much focused there. I'm a huge believer in like do one thing or few things extremely well versus kind of do everything a little bit, but then not too well. So building a GL is hard enough, as probably some folks would empathize with. So yes, we're very much going to be focusing there, at least for the rest of 2025. And then as we get into next year, I think we can start thinking about expanding further, but at least for the immediate future, very much focus in the core ICP there.
Yeah, and interesting. So you mentioned my tech stack survey, which I've run for 6 years now, and I think 2 surveys ago, you popped up on the radar in the accounting category and some other categories. And like you said, at least in the SaaS space where I'm in, QBO, Xero, Sage, NetSuite, top 4 positions for all 6 years. And then now you crack that chart because those are the big incumbents, right? We have SMB players, going after small businesses like QBO and Sage, NetSuite, going after the bigger guys. So where would, so say a founder has their business, or is it something where day 0 they can start with Rillet, or is it more maybe they start at QBO at $40 a month, get that up and running and then transition to Rillet?
Yeah, great question. So, and we had to, for also founders listening, like, so like you, we had to evolve our business model and like, as you sort of navigate that idea maze, things evolve. But today, very much focus on a mid-market. And that was always the initial thesis, but you still have to get smaller customers first, right, to get going. So, well, by now, it's very much focused on mid-market companies and to have real revenue, frankly, and the team. We do go lower to businesses that just get started, but these licenses are sold by accounting firms. So we partner with a lot of accounting firms across the country, some of the leading firms for startups themselves. So they will then put in Rillet instead of, for example, like QBO. They'll get special pricing as part of that accounting firm package. So we do capture folks at that rate, but not necessarily through direct inbound sales. It will be more via the channel of accounting firms.
Okay, so channel sales where maybe I need, as a founder, need to just outsource my bookkeeping, and that firm happens to have the relationship with you. But then on the other side, so you're saying, hey, companies that have some real revenue, so you're trying to catch those folks who maybe are on QBO or Xero and ready for that next step, and you want to intervene in there.
Exactly. So there is 70% of our business comes exactly from that interception point that you're describing. So there is a point at every. And again, for the founders listening, as well as some of the finance folks, they know there's at that point where you, in earnest, start outgrowing QuickBooks and Xero on like multiple dimensions around multiple entities, multiple currencies, deferred revenue, controls, audit logs, all these type of things, approvals. And there's a very natural transition point over. So 70% of our business comes from that transition point of folks moving from QuickBooks or Xero onto our platform. And then we have 30% of the business and growing by now coming directly off NetSuite and Intacct as well. And these are already bigger businesses at that point that are looking for functionality that, frankly, we have that some of the legacy folks don't, as well as sort of like much more AI native workflows in the applications themselves that are sort of looking to future-proof themselves for the next wave of technology coming.
Okay, yeah, that's interesting, and I'm looking forward to the 7th annual Tech Stack survey this year to see where you land with those big players. And one last kind of product question: say I don't know, 10 million in revenue. I've been on QBO. It's time to change. QBO can't handle what I'm doing. Switching accounting systems is hard, and I've done it, and just a pain. It's a big data transition. So what kind of time frame am I looking at if I want to go off of QBO and go live on Rillet?
Yeah. And nobody likes an ERP implementation. Just that word gives people PTSD, or like the sequence of words. So our approach is different in the sense that we try to take a fresh look at how this is done. So we've built software on the one end to help enable that process, make it faster. And then we also have a really talented in-house team that can just basically get folks up and running in a very short period of time. So what does that mean tactically? For a smaller company like a 10 million revenue type of business, we can get you up and running in 4 to 6 weeks today. We're compressing these timelines even further down into like within a month, basically. But today it's roughly between 4 to 6 weeks to get going with us. We have a team of accountants, controllers, CPAs, ex-auditors that does that work all day long, again, aided with software that we've built. So it's a fairly white glove process where the customer really doesn't have to do all that much, but for opinions on chart of accounts, department structures, cleanup exercises of data, there's that type of input work, but the heavy lifting of the data transfer actually gets handled.
Yeah, that makes a ton of sense. And I do think I heard it in my head of finance community that someone mentioned just how fast that switchover was to you guys, which was shocking. I think it was even less than that time frame. So yeah, that's music to, I think, every controller or CFO's ears. So Nick, what year did you found Rillet?
Yeah, we started the company in end of 2021. We were a good 2.5 years in stealth, more or less. So we always had customers. We always had early adopters. We were building that product in very close alignment with the community that we had, which I'm very thankful for these early adopters and believers, frankly, at that point. Like they wouldn't much to buy, frankly. It was very much like a bet on a team and a bet on that someone can build a better GL. And so we spent in that phase roughly 2.5 years just perfecting the product, all the edge cases, nuances, and again, for the founders and the heads of finances listening out there that are working on products that are extremely broad in surface area and complex, they probably empathize with what I'm about to say. It just takes a lot of time to find these little edges, the Excel exports, the durability, like to make this software really intuitive and feel like it's made for me as sort of a head of finance or controller. So that took us roughly 2.5 years. And then we came out of stealth, like announcing the company properly last summer, and it's gone kind of up and to the right as any founder would hope, frankly. Just like it was insane the last 10 months, and we're continuing to basically exponentially scale from here.
Oh, that's great. So founded 2021, out of stealth around 2024 last year. So let's talk fundraising, because I'm guessing this is not an easy product to build this full stack accounting software. So how much capital have you raised to date?
With the last round that we did just a couple of weeks ago, we're now close to 40 million.
Okay.
USD.
Okay. So close to 40 million. And it sounds like you just raised recently a Series A for 25 million.
Yeah, that's correct.
Okay.
And
So Series
first MVP, and I'm actually very proud of that. And I think it's by now it's enough in the passive. It's fine to share the internal stats. Is we built the first MVP of the product, and at these first 2.5 years with only like $3 million, something like an insanely low dollar amount. If you asked any like corporate or even startup of like intuitively how much money would it take to build a product like this, you're literally like an order of magnitude or 2 orders of magnitude kind of more cost effective. And we just frankly had a brilliant team and worked really hard to get that product out. But yeah, it was a very lean operation in the early days.
Yeah, that's great. And I appreciate that transparency, because it gives other founders a little ballpark there, depending on how complex the product is, just how much cash that takes. Always harder than you think to build those products. And so with that Series A, kind of fresh off that Series A round, so 25 million, what led you to that raise? Was it traction, signals in the market that said, all right, Rillet's ready for more capital?
Exactly. So it was a very organic process. We've had legit a stellar run, just like up and to the right, which I'm very thankful for. Like it's very rare that it happens like that. So in the last, since summer, basically, since we announced officially out of stealth. And so there was some interest already early in the year by some funds as people talk and get a sense for just the traction that the company has. And then but decided to not like proceed on anything there. And then just the interest, like our traction kept on accelerating. We also had bigger and bigger customers basically on the platform, very sophisticated teams as well. And so at that point, just that the intensity basically kept on building, and we had a few funds really tracking us very closely. And at some point, basically opened the process out of that to do the fundraise here.
Okay. And with those conversations with those investors at the Series A level, like what are those hard conversations? What are they trying to prove out? What are they trying to pull out from you and the team to determine if they want to invest? Like, is it, maybe beyond product market fit? Are you talking like the whole accounting, software world and that map, or what were those conversations that they wanted to have with you?
Yeah. And it really depends by fund. I think it is sort of my experience, and maybe some folks on listening here will resonate. It is very much depending on the partners or the investing team's experience that they've had in the category. So what does that mean very specifically? You will have had some folks that maybe invested in Intacct or NetSuite, and they had very specific views on the category formed by a journey of 20 years or 25 years by now on these type of applications and software, and had very different questions from folks maybe that are very much AI-first investors and were interested in us building that AI native ledger, but coming from a very unencumbered angle in terms of like what it means to build a ledger and other systems. So I think the short answer is it depends on what type of backgrounds the investors had. Definitely the number one most important factor is, do you have product market fit? Mm-hmm. But even that is a very, I'd say, malleable term. Like, what does it exactly mean? How does that manifest? It depends again by company. But that is the number one sort of determinant of like frankly success for your Series A. And then deriving from that, obviously, or building into that, it's obviously the quality of the team. In our case, it was like a core set of accountants, finance professionals that were really deep on the domain, and that kind of gave people confidence that we can build a highly technical product. And it kind of reflects in the product today. So that was one thing. Team was a big one. Obviously, traction and just raw revenue numbers and sort of like the go-to-market metrics that were important. And then, I think the third thing is that how do you ladder into this accounting ecosystem? There's a lot of chatter about AI and accounting. How does it change? Like, what is your vision? Do you truly have a groundbreaking vision and insight into like what that future could look like? You may not be 100% correct, right? Everybody knows that, but like, are your views informed? Are you opinionated? Do you have a credible sense of where the future is headed? And do investors want to bet on that? And so these were sort of the three input factors from, again, T, traction to vision, that ladder into product market fit then and their decision.
Yeah, really interesting. Well, we'll talk go-to-market in a second, but I was just talking earlier this week to a VP of finance there in QBO, thinking about that next step, and you came up in that conversation. And I noticed on your landing page, AI-first ERP. So And before I remember, I got started software in the early 2000s where it was on premise and it was maybe, oh, we're cloud first. Now, AI first. So, and it was interesting because I think that conversation with the VP was, looking, okay, I need a bigger platform. I need an ERP, but now I think I need a next gen platform. So, with that landing page AI first and probably tons of conversations with CFOs and controllers, are expectations changing for accounting software now?
Rapidly. Yeah, is it PLER? So I am finding, so as we start building this company and sort of as the journey progressed, AI was rapidly on the rise. So you could see that coming. It was a real scary term for like even last year, I'd argue. I'm still where if you're AI native, like you show off your AI functionality that you have, people are interested and curious, but like so quite skeptical. And you have a lot of skeptics, rightly so still today, because these models are very early. But there's something that flipped this year, definitely, where the argument that I'm making to folks is very much like, this is a very fundamental buying decision that you're taking here. It's an ERP, it's a GL. You're likely going to be working with us for the next, hopefully 5 to 10 plus years as a product, as a team. And do you want to bet on a company that has the best AI technology basically on market for accounting and finance, i.e. your specific domain? Or do you want to work with a platform, again, I'm going to skip the names, but like that has just been around for 25, 30 years that has not delivered much, talked a bunch, but not delivered much on the AI side. So it's a little bit of also like, is a long-term decision you're taking and bet on trajectory. And I think that gives people a lot of confidence in what we're doing at Rillet.
Yeah, definitely. I think that's going to put a lot of pressure on the incumbents to catch up and pivot. So appreciate that insight. So before we talk go to market, what about lessons learned in that Series A raise for other founders out there who've maybe raised a little seed? All right, we've got some traction. Maybe we want to go to for Series A. What would you like to pass on to the founder community?
So for me, it was really, the raise happened very quick, which was awesome in the moment. Every founder and again, also finance professional will resonate that the shorter the raise is, the better in terms of like just not being taking out of the business for too long, frankly, given the opportunity cost that you have when you're selling and growing so quickly. So for us, it was like almost a 3-layered approach that kind of led to a very successful Series A here. So number one, and the most fundamental thing that people sometimes forget is a strong word, but like, at the end of the day, it all boils down to the quality of your business. So investors are extremely smart. You can joke about VCs and their VC patterns and following certain trends and stuff, but at the end of the day, you're dealing with highly intelligent, very motivated, very plugged in individuals that will see through the BS. So if your business fundamentals are strong, it all starts there. And that is not like happening as part of the raise. That is sort of the couple of years prior to that raise of the work that you put in. So I think the tactical advice there is like, when you execute on your vision and your product, keep in mind where does it need to be, and then take the actions today in the next hour of like, what do I need to do to get me there? I think that's sort of the overarching thing where there's not like a hack to fundraising in that sense. It's very much like focus on fundamentals and good things will come. That is very much a longer outdrawn process, obviously, building the product. So that's layer number one in my mind. Before I go into 2 and 3, any questions or follow-ups there?
No, that's great. And yeah, VCs get a lot of reps, so they've seen a lot of businesses. So yeah, they'll see through any charade. So appreciate that.
Yeah. And they can even like tell by the way you talk about your business, they can immediately detect at what stage you truly are. It's really hard to for people that want to learn the fundraising game, quote unquote, I'm not sure there's that much to learn. Like, people are extremely intelligent and kind of piercing through the smoke and mirrors that the founders they want to put up. So number one is like business fundamentals. Number two for me is very much the relationship. So we worked with funds that have been in some cases tracking us since before the company started. Like, I really know these people from when even Rillet was born as an idea, basically. And so relationships really matter. As a founder, you don't have a capacity or CFO with capacity to do network with all the VCs and build relationships with everybody, but select your core 5 to 10 people that you want to surround yourself with and try and cultivate these relationships proactively. So I think that's another very natural thing that we just had with a group of people. And at this height of the frenzy, it's a highly competitive raise. You have all these investors trying to push into the round and everything. At the end of the day, like, having a North Star on the people that you work with, because you have data points on them on like years before, really matter. And so like the relationship thing, I think is real, at least for us, in terms of deciding on who to work with. And again, sometimes gets a little bit forgotten by founders because we're so focused on building our own business. Right? Yeah.
Okay. Yeah, no, yeah, appreciate that. So quality of the business, VCs will see through, and then just those long-term relationships do matter in the end. So,
Yeah.
Nick, let's talk about go-to-market. So obviously you've got your channel, going through bookkeepers, accounting firms, but so you're going right into that, trying to find that controller or CFO. So tell us a little bit about how you're finding your prospects.
Yeah, so today we're quite fortunate in the sense that it's all inbound, full stop. We're like people are finding us through various sources and channels. There's a lot of good press on us. By press, I don't mean necessarily like the tech crunches of the world. I mean like your influencers like yourself, like your blogs. There's content around like Rillet on your forums and things like that. So people are really resourceful at finding things. We have a perfect 5-star G2 review, for example, for there. And so I think that really helps in terms of just fueling the inbound. CFOs are very social buyers as well. They hear from friends. And nobody wants to be sold to, but everybody wants to hear about the latest tech. So it's like that dichotomy of like people are very interested, but they don't want to hear it from the sales folks directly, basically. So that we're fortunate there. It's actually probably 95% of lead flow comes through inbound. And then what we're doing and standing up as we speak is much more like the go-to-market machine, quote unquote, as people sometimes very functionally refer to. But yeah, a channel will be a huge part of that. Again, we're already working on some of the top accounting firms, and there's a bunch of other channels that you go through if you're selling an ERP software.
I've noticed, and I've got a heads of finance community for tech CFOs, and that comes up a lot. Tech questions come up a lot. I have a channel just for that, and they want to hear from other people who have used it, or how is this implementation? I'm considering this vendor. How did it go? Let's talk versus the company giving that referral. No, I want to find my own referral who's going to speak, straightforward.
People will literally cold outbound folks that we have case studies with or that are in our logo strip somewhere, but not just one. They will do 2 or 3 outbounds on this before they even talk to us for the first time. So it is a little specific to the CFO community specifically. So maybe interesting for your listeners specifically. Obviously, I think other industries work very differently.
Yeah.
Customer momentum.
Yeah, definitely. And I notice you're, follow you on LinkedIn and active on LinkedIn. How, as a founder and on LinkedIn and promoting your company, like, how is that as a channel? Does that generate a lot of interest or awareness or some inbound for you?
It does, in a sense that people want. It's a little bit like with. I'm making an analogy here. TBD if this holds fully true or not, but I feel like there still is a movement very much in the B2C line where people buy like clothes or food from like basically brands they trust, from like brands they associate with. And so I saw at Harvard Business School probably can write a case study on that or like some sort of a long PhD thesis. But like the reality is it feels like at least in our version, like B2B vertical of a really high trust sale for mission critical software that has the potential to really change fundamentally people's lives. It's very much people want to get to know the people behind who's building. And so LinkedIn is a very powerful tool for me as a founder and CEO of the company to kind of share a bit more about myself and who I am as a founder, how we're building the company, inside stories about the team, about the product, about learnings, about lessons. And so I guess a long-winded answer to your question, I do think it helps provide sort of a brand halo around like all the inbound momentum that we have that just makes us a bit more personal than a NetSuite or Sage Intacct that is just a brand, quote unquote.
Yeah, no, appreciate the insight. Yeah, a lot of different ways to use LinkedIn, but I love, the kind of that personal side. So tell us a little bit about pricing. We know, at least in the SaaS world, like a lot of different ways to price, subscription, usage, all these other different models, but tell us a little bit about how your pricing structure works.
We try and keep it simple. Visible summary. We have a base platform fee and then certain modules on top. We are experimenting with different ways to price the software as well, especially as we have these AI agents that we basically will be able at some point to like be used for very specific processes. So you can think about more of an outcome-based pricing model there, but it's still evolving. What an agent means in accounting is actually also still evolving as an industry, I think we are. But so there are interesting tidbits there, but for now we keep it simple. Base platform feed and with certain modules bolted on top. The only thing that we do differently from maybe some folks out there is we don't try and index on user seat-based pricing too much. And why that is the case is I hear these really, frankly, pretty insane stories about people sharing logins of some of the legacy software, which completely violates anything in terms of controls and approval workflows and anything else to save cost or be cute about the cost because some of these seats are so expensive. And so that's one thing in terms of core DNA. We're very much for like an open platform, wanting to share information and doing what's right by the customer. So the seat-based pricing is something that I don't see a lot of future for our specific vertical and industry.
Yeah, no, I love that because you definitely for accounting software don't want them sharing logins. We need internal controls.
Yeah.
So yeah, I love that. So Nick, at this stage of your business, moving up and to the right, do you have a favorite number or metric that you're focused on to guide the business, whether that's operational or financial?
Yeah. So the two things that and it's maybe a good proxy of what matters to the business, where I obsess on as a founder is NPS and ARR. That's basically the two things that really truly matter for Rillet. And so NPS may be obvious, but again, just to iterate, like happy customers are the best form of marketing, especially in our sort of domain and ecosystem. People chat, people want to hear about products, and they really trust their peers more than they would trust a software vendor. And so I think that's number one. And NPS is a great way to very reductively, but measure that very effectively. So that's number one. And we're sort of like in 75 plus there. So
Nice.
Or like ours. And so that's top priority. ARR, as our investors are focusing on that and is a very healthy sign of this momentum and progress. It's obviously very important too. And we're focused there. But it's for me that the sequence is really like great NPS will like yield to a lot of ARR if you're building into a large category like ours. So it's kind of in a forced ranking that way. And then maybe all the retention metrics and so forth are less of a focus for us at this moment, just because the retention is absurdly high for a product like ours in the first place. And we have like the retention metrics that we have, people have kind of never seen before. It's like close to perfect. And from that perspective, you have a really strong sort of retention mechanism there and also upside potential over time because you're building a platform, et cetera, et cetera. There's more value that we could provide over time. So it's really NPS and ARR that matter most, and then retention at some point, the more so probably as we scale the business.
Yeah, no, that's great. I mean, this, simple focus, NPS, ARR, and I know lovers and haters of NPS, but I do like, any feedback I feel is good feedback, and I've been tracking NPS for 8 years on my content just to make sure it's great feedback, especially that text feedback. Please put a little text comment in the NPS box. I love that. So yeah, so that's simple, straightforward, get your team focused on that. So Nick, few stats and figures before we wrap up today. So where are you guys located? Do you have a headquarters location?
Yep, we're based in New York City as a headquarter and have a team that's somewhat distributed as well. So we cover Ireland as well.
Okay. And what's your current team size?
We are between 40 and 50 on the team, quickly growing. So maybe quick plug on anybody that's looking for jobs, especially if you're a great accountant or a great engineer, we have an infinite amount of seats for you. So please apply.
I was going to ask, please plug if you're looking for to fill some positions. So check out, Rillet's career site. So that's great. And then Nicolas, what's coming up next? I'm sure, you came out of stealth in 2024, a lot going on, raise some money, add some kind of fuel to the growth here. So what's on deck for 2025?
Bringing it back to the KPIs, it's all about NPS and ARR growth. And so in that sense, again, in that order, it's very important. So we are investing heavily in R&D, customer support, implementations, just to make sure we can service the current customers that are coming on board as well as we could our first customer. It's a really high quality bar that we have here at Rillet. And so that's top priority. And then the second thing is also just AI. There's so much you can do with AI. I feel like every day we're just scratching the surface with we have these little agents that are working in the platform doing like magical stuff. Like you get goosebumps on some of the workflows that perform. And so I think we have a huge opportunity there with the data that we have to build more of these and build them more and more ingrainedly into the platform. And so that's the second focus area for 25.
Well, that's great. Well, looking forward to following your journey and following your LinkedIn posts to see what's happening. So appreciate your time and sharing your experience. If listeners would like to learn more about Rillet, where should we send them online?
Rillet.com is the easiest way to find product information and career information. I also have a blog there. And then for folks that want to follow us on LinkedIn, either the corporate handle or my LinkedIn, feel free to get the latest and a little bit of inside story on how we're building Rillet.
All right, perfect. Love it. So check out Rillet.com, which is RILLET.com. And again, Nick, thanks for coming on the show today.
Thank you, Ben, for having me.
Thanks.